Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. And it's Hump Day and Happy Halloween, everybody. It's October 31st here. We got a couple economic news releases today. As I mentioned, this week is going to be a good jobs report week. And today's the first day we will start seeing that, starting with the ADP employment number. This is kind of the indicator for private industry jobs. So the previous reporting back in September came in at 218,000 jobs. There are some whispered numbers out there. They thought it would be right around the 200,000 level, and it came in much higher than they expected at 227,000. So very good numbers here from ADP. So it will be obviously important to know coming Friday when we get the BLS's reports how that will turn out. So we're thinking it could be a strong number because they used that sample number a few weeks back on the initial jobless claims, which was a strong number, and that might lead to a good, strong October jobs number here. And then tomorrow we'll have the initial jobless claims. Last but not least, we got manufacturing in the Chicago region. We had Chicago PMI for the month of October. So in September we had a 60.4 rating, and then it dipped a little bit down to 58.4. So to anything above 50 on this index is considered expanding territory. So it's still good territory, but it dipped a little bit from September to October here. Let's take a look here at headline news. Stock market is up. Dow is up quite a bit so far this morning. It was up at like 350. Now it's kind of subsided a little bit. I've been seeing kind of dip go between 215 and 300 now. So it's kind of subsiding a little bit, but still very good. We had Facebook came out with some of their earnings. Profits were better than expected, so that was so the stock market is liking that. They're also kind of liking the strong ADP number, so it's taken off. So I had a very strong finish yesterday, and it's kind of continuing into this morning's trade so far. So let's see how this is affecting the bond market. And of course, as usual, as the stocks take money from the bond market kind of suffers. So we're kind of down right now. We were down as much as 20 points earlier. Now we're down to about 14 basis points being down, and that will lead lenders to changing the pricing to worse pricing. So interest rates have climbed up slightly as a result of that. As you can see, we're kind of in this middle where we have plenty of room going upwards to the 25-day moving average, which would be the next level, and then we got next level will be floor of support here in those. So you can see it could go one way or the other direction, and right now we're in this middle range, so we're kind of where we should be. Here's a 10-year Treasury. So yesterday we kind of were trying to push up against this ceiling resistance, and it kind of held it. It was kind of right on that, but today it kind of broke above that, and it's really pushing the 25-day moving average. Right now we're kind of sitting at the 3.14 range. So just right above this line here, this 25-day moving average. We'll have to see if it can hold or push it back later in the day, but so far it's been a pretty strong day for yields and stocks. So we'll have to kind of wait and see of any possible reversals or if it continues that trend. And as you can see, here's also in the middle range here. So we're it could continue as we go here. But the big one, of course, will be this ceiling resistance here if it breaks above it, because the next one up will be up to 3.25 here range, and that will obviously put more pressure on bonds and higher rates. So that pretty much wraps things up. I hope you guys enjoy your the rest of your day. I hope you have a good, safe Halloween tonight. And thanks so much for watching. We'll look forward to see you guys tomorrow. But if you guys want to see any updates or any changes in the market, I'll be posting on Twitter. You can find me at Mike Bjork and get your updates there. Enjoy the rest of the day. And again, well, thanks for watching. I'll see you guys tomorrow. Bye-bye.